Markets.com, and today is Wednesday, ladies and gentlemen. Right, the markets are in positive territory, or have been in positive territory. Yesterday, the bulls are basically fighting back. We have Rachel Reeves delivering the UK budget, the UK autumn budget today, so stay tuned. This is, by the way, a video preview for the webinar, which is going to happen in a few moments, so stay tuned. Do not tune out. Hopefully you'll enjoy the session. I'll see you in a bit. All right, ladies and gentlemen, hello, and good morning. My name is Darius Anucauskas, and I'm the Chief Market Analyst here at Markets.com. And today is Wednesday, ladies and gentlemen. Wednesday, yes, the 26th of November, 2025. Still, yes, we're getting closer to the end of the year. We still have a little bit, a few days to go. Let's put it this way. Look. The markets, we're going to talk about those. I hope you can hear me and see me well, because I have a microphone which is a little bit too low in my opinion, but hey, probably will do. Maybe I'll do it a little bit of higher thing. So yes, I hope you can hear me and see me well, ladies and gentlemen. So yeah, like I said, the markets are, well, they're interesting, as always, as every week, as every day. I don't know, this year has been, probably last year as well, everything seems to be okay. Hans Nortje here, good, yes, very fantastic, thank you very much, thank you. I think I haven't seen you before, so first of all, thank you very much, and you know what, you actually beat me to it. Good morning in the chat room. I was hoping to be the first one in the chat room to say good morning or something, or in general to make a comment, but good morning everyone. Actually, thank you very much. Thank you very much, Hans. I hope you're all doing, yes. I hope you're doing well. I hope you're doing well. Look, we're going to talk markets. Certainly, that's what we do every day almost. Before we jump in, let me tone it down a little bit. Before we jump into everything, let's quickly have a read through our risk disclaimer. So yes, the content we produce does not constitute investment advice or investment recommendation and should not be considered as such. This material should not be taken as an invitation to acquire any financial instrument or product. I'll give you a few seconds to read the rest. Not going to disappear anywhere. Yep, just gonna check if all my systems are running well. Everything seems to be fine here. Okay, wonderful. Right, also just a quick mentioning of our Markets.com website, which you can always check out for more information about us. If you have any questions, reach out to us. We'll be more than happy to assist. And also, ladies and gentlemen, today I am running a little webinar on Fibonacci's. So basically, I'm picking up on one of the top top tools, top technical tools that traders like to use, and basically apply them and apply them in real life market action, and we do some trades, some live trades on our demo account, just to see basically if it's working or not. So this is going to be the 4th episode now, so you can if you haven't registered for that webinar, you can go into here, learn, then webinars, and it will throw you out here. I think they removed it already. Why is the registration closed or something? Why is that? Like, you can still find the link in the description of my, let me fix this, honestly. Like, this is, like I said, this is when you leave it to the team, then, yeah, this is interesting. This is, there we go. So basically, okay, so the link is still in the description of this webinar right now happening. You can check it out, but I don't know why did they remove here. Anyway, I think the registration is closed or something, but nevertheless, ladies and gentlemen, let's like I said, this is the webinar that's going to happen today. Like I said, it's the 4th episode already that I'm doing, and it's going to be, like I said, we're going to be doing some live trades. The whole point of such webinars, the whole point of these series is to see if what's working, what's not, because we know that there's a million of different videos out there, how people are using, like a Fibonacci or a MACD or RSI or like, Bollinger Bands and everything. And they show some good examples, but it's kind of, it's sometimes it's almost like picture perfect. It seems like you picked it perfectly for the video that you want to do, and it all suddenly worked out. Look, in all these webinars that I did already, those were, like I said, live market action, because I do it when, like, half an hour after the U.S. opening bell. Sorry, no, 4 o'clock is my time. No, that's going to be 30 minutes before the U.S. opening bell, and basically then we have a lot of volatility. Then we try to apply it, and I like to utilize the volatility thing, and yeah, I hope you'll like it. It's fun. Like I said, the people who were viewers who were attending, they kind of enjoyed it, so I hope they were not lying. But yeah, ladies and gentlemen, so yeah, I'm looking forward to seeing you there. So it's not late to register yet, so hopefully. If you do have any issues with the registration, either reach out to me on LinkedIn, or basically you can like get in touch with our customer support team. Right. Anyway, enough of these sales from my side, ladies and gentlemen. Economic calendar. That's always what I jump in first. So Wednesday. So let's have a look what happened today. And where's that? Wednesday? That's Tuesday. This is Wednesday. Ladies and gentlemen, today we already got the Australian CPI figure. So Australian inflation number. Okay, so the inflation headline year on year came out 3.8. Wow. Talk about further rate cuts on the on the RBA side. But yeah, for the Australian inflation comes out higher. The month-on-month figure 0, okay, but the year-on-year increased. Now, also, what else do we have? Oh, RBNZ interest rate decision. There we go, ladies and gentlemen. As expected, 25 basis point cut from the previous 2.5. Okay, it was expected. It was widely expected. So to be honest, no surprise here. Let me just redo this. And these are my charts here. Let me just I'll pick up in a bit on oil, but yeah, oil is very interesting. Now, looking at the RBNZ. Look, the guys there have dropped the rate to their levels last seen in 2009, 2011, 12, basically, going into 13. These are the levels where we were back then, and those were the years kind of after the crisis. But I cannot really kind of draw any correlation here at this point. I mean, at the moment, the only thing is that what I can say is that that New Zealand is trying to stimulate economy. They're trying to they're trying to boost their economy, because again, their GDP growth, the latest number that came out, the Q2 that came out was in negative territory. So the previous one was at plus 0.9%, and the actual number came out minus 0.9%. So now the expectation for the Q3 number, which is going to come out in mid-December, is for a number to a greater number, for it to jump back up. Look, we'll see how it goes, of course, but certainly New Zealand needs to boost its economy, needs to present something, and I think that the interest rate cuts are the one that kind of helps out. Yes, at an expense of its own currency, but hey, what to do, right? Inflation remains at 3%, although it's not, let's say, major in comparison to other countries, other developed countries. But the fact that it's kind of rising, it has a trajectory. Just it comes out every quarter, and the last time it was at 2.7. Then the Q3 came out, it was 3. So to be honest, we're kind of seeing the trajectory, and I believe that there could be some more upside on the inflation side. So until it's still manageable, because I know that the RBNZ and BNZ inflation target is between 2 and 3%, if I'm not mistaken. I think Australia is between 1 and 3, and like RBA in RBA is between 3 and between yes. So sorry, yes. So RBNZ is between 2 and 3, and the RBA is between 1 and 3. Okay, so they're still within the target. So basically, that's why they can allow themselves to go for those rate cuts, and so they're basically going like, okay, the GDP is, the growth, GDP growth is dropping. We need to boost. We need to boost demand. There we go. Let's go drop the interest rate until we can, because eventually they will have to start hiking again. So yes, it will. Yes, our New Zealand dollar will suffer. But that's the kind of probably the least of the problems at this point. Again, depends. Certainly, on the other side, while the stock market is kind of still elevated, they can also allow themselves to go and cut rates, just because the New Zealand dollar is also kind of seen as a risk currency, and whenever the stock market goes higher, when the risk on environment prevails, then you have your AUDs and NZDs traveling a little bit higher. Again, depends against which currency, but mostly against the safe havens, CHF, JPY. But anyway, I'll jump into the Forex world in a bit, but first let's get rid of the economic calendar very quickly. So yes, the press conference, we had that one as well. Japan, nothing major here. Okay, stability review from the ECB. Okay, look. Nothing. I don't have anything to add there, to be honest, because for me the main concern today is the fact that yesterday we had the rally in the stock market. Yesterday the indices did perform quite well, I would say. Dow was the biggest gainer, followed by the S&P, and then Nasdaq. So like I said, I'll jump into those again as well. But yeah, we're watching the UK budget today, ladies and gentlemen. That is going to be an interesting one. And if you are trading something pound related, something FTSE, something FTSE, yes. Yes, keep your eyes on that, because look, everybody, I think, understands the fact, and I think the market now kind of got to the point where we already know that there's going to be a tax hike. Okay, so that's where the whole kind of presentation, that's where the whole initial briefing, the initial press conference which Rachel Reeves had in the beginning of the month, that's why it happened, because kind of to warm up the public in a way. That's how I see it, because to be honest, I listened through the whole thing, and I thought I killed some time in my life. But certainly it's maybe I'm wrong, maybe somebody actually found something useful in there. But to be honest, every single time there was, when she was asked about, like, are you actually gonna raise taxes, because this is something that you kind of said that you were against when you were going, when Labor was in elections, we're kind of, this is the whole agenda, that how you won, because you're not going to raise taxes, but now you are. So and she kind of she just went away from that. But it's like, it seems like the only people who can get away with that are politicians, and that's kind of it. So anyway, but look, what I'm watching here today, because tomorrow the U.S. stock market is closed. On Friday, the U.S. stock market has a short day. So today we're gonna have basically a very interesting day, because not only it's the stock market pushing higher, it's the UK budget, but also there's a kind of an unofficial, I would call it an unofficial deadline for sorting out the Russia-Ukraine conflict, but somehow I believe that it's going to get pushed away further. So the can is going to get kicked, honestly. Like, it's maybe I'm in this point, I normally say that I'm a realist, but at this point I'm a little bit of a pessimist. So I kind of think that the can will get kicked further, so we'll see, of course. Anyway, but apart from the other, apart from other news, we get the we should be getting the continuous jobless claims, initial and continuous jobless claims. Okay, where's that schedule here? Do we have anything? No, we don't have anything. Why do we? Who? It should be Department of Labor. Okay, Department of Labor. Hopefully we're gonna get that from them. Durable goods orders, Chicago PMI. Now this is interesting. We're currently below 50. We remain below 50. That's not good. And apart from that, we don't really have much anything else. We have some speeches here apparently from Christine Lagarde. Fed's beige book. Okay, Fed's beige book. Right. Look, what can I say? For now, the main events. I think we do have enough. So will the whole market positivity follow today? Let's see. First of all, let's jump into the indices, ladies and gentlemen. So yes, we're seeing Nikkei here drifting back up. Look, in general, there's positivity because yesterday the whole kind of idea, the whole positivity was from Google and Meta, which I'll jump in a bit. And they're like I said, and this kind of had a positive effect on other indices. And look, for now, I mean, what I was saying what is this? Yes. What I was saying basically before that, and actually I think it was in the newsletter that I reported. I'm going to send out, so don't forget to sign up. There's every month I do a newsletter, a little brief picture of the market, what's happening, what happened during the previous month, and what to expect in a way going forward. It's like I said, a little brief newsletter. You can sign up for that one. But look, what I said basically is that for now we have those two economies, right? And it's not a secret. We have those two economies where one is driven by labor force problems. The other one is driven by how great AI is, and how companies are benefiting from that. So that's where my problem is. So in the very, very short term, I think that we will see these like little boosts of positivity from companies, that suddenly one company made a deal here and there, like for example now Nikkei, Nikkei is reacting to in general what's happening in the market. We're seeing it push higher. We're near this downside resistance line. Let me just get rid of this and I'll jump into the US indices very quickly. So we rebounded, and I said it before. Look, I will not touch this one as long as we remain in between these lines, the downside line and the support line. So basically in this little descending triangle pattern. If we start breaking through one of the sides, then I'll do something about it. But at this point, I'm just observing the price action. Shanghai Composite very quickly also getting a little rebound. I talked about this. I said, look, if we can see a correction back up. But if we stay somewhere below the 50-day EMA and this downside line, then another decline here could be possible. But if we do push, through this downside line and we climb above the 3,922 territory, I'll consider a move to the upside. Now, finally, okay, US indices. Look at this. Dow rallying, boom, to the upside, clearing that 47,000 zone and testing my upside support line taken from the low of the 10th of October. Now let's see if it's going to hold, because again, I'm kind of supporter of the theory where whenever we break a trend line, we tend to revisit it from the other side and then kind of resume the the breakout trajectory. And in this case, so yeah, let's see if this is not going to happen. And if this is not going to happen, okay, then we'll go higher, but for higher, I would prefer to see a push somewhere above this 47,400, 1213-ish zone. Look, with yesterday, yeah, Google and Meta destroyed NVIDIA, basically because again, Meta wants to spend billions on Google's chips. It's, look, I'm already lost in terms of the, all these spendings and everything, and it is a circle economy in their little world, and it seems like they're creating wealth and they're just lending out money to each other. I don't know, I call it money laundering, but hey, it's not, of course it's not. It's this, and these little contracts do, like I said, these little headlines, they do give the market a boost. Certainly, NVIDIA did not really like the whole thing. However, it did recover very rapidly, just because the stock market kind of do like a strong move to the upside overall, and I think that Nvidia kind of, people started buying Nvidia just because, again, it's Nvidia, and it dropped slightly below the 170 zone. But what's interesting here, looking at this daily chart on Nvidia, if I do apply technical analysis in this one, but I always say that, ladies and gentlemen, do not, please, because again, you can do it for fun, but just, let's say, do still keep an eye on the fundamentals, okay? This one did travel back above the 170 77 territory right here ish. Also, it climbed above the 100-day EMA, shown as the blue line, and it stayed above it. So in a way, it's kind of pointing more towards higher levels. But again, it's all subject to what's going to happen further, because the stock market right now is on shaky grounds. Now, I'm coming back to the point which I started saying in the beginning, and then I kind of cut myself off. Look, we have two economies, right? One is this whole AI corporate thing, where simple people are not benefiting, but the corporations are benefiting, because they keep on saying, "Oh, it's going to be great. It's going to be great for you." But not for us. But okay, for some, yes, but certainly for those who are losing the job, then it's not going to be. We'll see how it goes, of course. And whenever I hear that, oh, but they can requalify, the companies will help to, do a new career somewhere or something like that. Okay, you do it. Why don't you do it? So everybody's always, like, good and nice when it doesn't, kind of touch them in a way. Anyway, so yeah, looking at this picture here, I am cautiously bearish still, on Dow, but I have to look at the S&P. Maybe my opinion will change. Right, okay. This one wants to move a little bit more to the upside, so maybe actually we should ignore this upside line. We'll see. Look, I'm not going to rush into things, okay? I want to see what's going to happen. So with NASDAQ, okay, this is interesting. So Dow and NASDAQ are showing kind of a moment where maybe we could resume the downside scenario, because let's not forget that this one part of the economy, which is the corporate AI thing, or where everybody's like buying chips from each other, or investing in each other. That's one economy, but the other economy is the labor side. Look, ladies and gentlemen, if you want to have a look at what happened yesterday, the ADP employment change weekly, I mean, minus 13.5K. I mean, this, it's not good. It's not good, and the people are losing jobs. There's not enough job creation. Okay, maybe people are not losing jobs at the speed which can be seen as a critical one. But they're slowly starting to see that, and they're getting worried. And then, we have these announcements of latest, I think, who was it? Yesterday, I think, because again, there's like so many coming through that latest corporate job cuts. HP, yep, 6,000. HP is going to lay off some people. Now, Amazon, of course, they are planning to do a half a million. They said half a million jobs worldwide, not only in the U.S., worldwide. Like, thank God, right? Still not good. Anyway, but then I can see Target also is cutting. So major retailers are also cutting. So there is an issue. There is an issue, and because you see AI is gonna do things better, and it's gonna improve shopping experience. It's gonna improve the services and everything. To whom? Again, to me the yes, AI is great, don't get me wrong. I might sound right now that I'm really like a negative person around AI. No, it's a good tool, but the thing is that I do also see it as a tool which creates a bigger gap between haves and have nots. And we can debate on this, but I do believe that, and anybody can tell me some. Maybe then somebody can tell me something else, certainly. But again, it's my opinion. I might be wrong. Certainly, I might be wrong. I do accept that. But for now, at least, I might change my opinion later on if I see more evidence. But at this point, I don't see that much evidence, and that's why I'm worried. Anyway, so let's have a look. What's, like I said, what can we do here with Nasdaq from the technical side? Now, look, we are now flirting with this downside line. Let me check where is the cash index right now, because the cash index right now is around 25,140. So we're basically above the downside line, but we're still below this little hurdle that I have on my chart here, this 25,183.84. It coincides perfectly with the 20-day SMA on my daily chart in my Bollinger Bands here, and if we do clear this one, I'll go to the upside. But if at this point, I'm not really gonna do anything with with this one. Yes, great. We had a great run to the upside, but certainly just let's be a little bit more on the careful side, on the cautious side. Like I said, I am keeping an eye on this barrier. I like this one barrier. If we do clear it, I'm gonna go to the upside. But for now, like I said, I'm neutral probably. I'm gonna get a little bit more bearish if we do see a drop back below my 50-day EMA, shown as the green line here. This is the 50-day EMA. This is it's around, not far from the 24,800 zone. If we do fall below that, I'm going to lean towards the downside. With the S&P, okay, this one, look, previously we were in this little triangle pattern, and we violated the lower side. I was kind of bearish, but I said then I'm going to get more bearish, excuse me, messages from within. I'm going to get more bearish if we do fall below the 100-day EMA, because we have not tested the 100-day EMA for a while now, and it does provide itself, it does kind of provide a good support area, and we can see that, and okay, I need a clearance of that, very simple. I also need a clearance of the 6,631 zone-ish. It kind of this area, not exactly the level, but the area around that level, and basically kind of coincides nicely with the 100-day EMA. If we can get that, great. I'll go to the downside. For the upside right now, yes. So I'm leaning a little bit towards higher levels and maybe on the S&P, but again, the 6,765 is currently what I'm watching. Let's actually see the S&P. Where's my S&P? S&P 500. So 6,792. Okay, yes, we're above. So basically, it seems like we're gonna go and end up testing this downside line. So we might see another positive day today. Okay, interesting. Let's see if that's going to be the case. Look, I'm going to remain positive today if we do continue to trade above the 6,764 territory. Yes, I'm going to stay. I'm going to stay kind of aiming higher. If we can get that move, great. But if it suddenly starts falling below this hurdle, and we fall below the 20-day SMA within my Bollinger Bands, I'm going to consider a little bit of a move to the downside. But again, my problem is this maybe we're having a formation here of a bearish formation, like a bearish 3 method, when we have a big candle to the downside, then a 3 consecutive candles almost within the body of the first candle here, and their total bodies, like the total size of their bodies, is within the first candle-ish. Again, that's what I'm saying. It's not picture perfect, but we know that we never kind of get picture perfect. Well, actually, sometimes on the stocks maybe. But yeah, keep your eyes on this one, ladies and gentlemen. And again, I do like the idea to the downside because again, it's for me, it's worrying a little bit that we are seeing such a rally. Just what? Because some tech giants make money transfers here and there. Okay. Anyway, let's see what's happening in Europe. Okay, seeing a little bit of move to the downside. Sorry, had a sip of tea. I hope you all like my yellow cup, a mug. Look, DAX, we climbed above this little hurdle, and I have to, I have to stick to my words, and I have to say that if we do see this index remaining above this little hurdle right here, then yes, I'm gonna continue targeting the upside. I have to stick to my words. So yes, for now, I have no other kind of option just to kind of stick to my guns and say that, yeah, I'm going to lean a little bit more towards the upside if we're going to continue trading above the 23,500 and kind of 530 zone-ish, somewhere around there. If we do that, yes. But if we start falling lower, if we do break below this upside line right here, I think that this is where the interesting bit comes in, and this is where potentially more sellers could join in. So I'm going to keep an eye on that one. The UK, of course, we're watching this one, certainly, the FTSE 100, look, it climbed back up. So with the UK budget, like I said, we're watching this one carefully. What's interesting is that I think, like I said, because the market has already kind of made up its mind, and we know that there's going to be a tax cut, so we're accepting that. So this might not actually drive the market anyway. But what could happen in a way is like if somehow the budget would undermine future rate cuts. Yeah, that's going to be an interesting one. So future rate cuts. So basically, let's say if suddenly it causes, the budget might cause inflation. If the market sees and believes that the budget might cause inflation in the near term, that's where a big turnaround could happen in the equities, and we could see a nice drop lower. And the pound, of course, also, the pound could rally in a way, but certainly let's not rush into things, okay? Because we know that in the budget we'll have apparently wage growth. The minimum wage will rise, and well, that's inflationary. It's a good thing, but it's inflationary. We cannot deny that. So that kind of increases the risk of inflation. And we know that UK's inflation, let me just remind myself very quickly. Oh, why is it not opening? What's happening here? UK inflation, I think it's very much above United Kingdom, 4%, sorry, 4%, that's interest rate, 3.6% when the target is 2%. And the number has been kind of on the higher side. Yes, recently it came out on the 19th, it came out to the downside, and it came out lower than the previous number. That's fine, but still it's higher, it's elevated. So long story short, I would say this way, that if we are looking for some upside, we do have an opportunity here to go higher. But I would say it's if the day would be normal, if we wouldn't have the budget announcement. So if it would be just a regular day when the previous day was positive because of some deals, then then I would say let's aim for the upside. So for now, the technical picture for me is telling that yes, it wants to go a little bit more to the upside, but maybe it's gonna something like this could happen. So just keep that in mind. So we could go a little bit higher. 9,000 kind of 695, 96. We could test that. If it provides good resistance, another decline could be possible. DXY, very quickly, dollar index. So I talked about it, and I'm going to repeat myself that I do like this one, and at the moment it looks somewhat bullish. Why? Because we're traveling higher, we're trading above this upside line, we're struggling with the upside, like let's say further upside. We're struggling with this little barrier, the 100.36. If we can clear that one, a forthcoming higher high will be confirmed. At the moment, we're not really getting that, so we're getting a strong rejection from this area, so we need a clearance of this area. So, and basically, long story short, it's just forming something of a possible ascending triangle pattern. So according to all the TA rules, such patterns tend to break to the upside. However, we've seen this happening in the opposite direction, so that's why we wait for the confirmation break. We don't do anything. We just keep an eye on this one. If you okay, look, I mean, don't get me wrong. If you like to trade this, then fine. You know, like, be my guest, because you know yourselves better. I'm not here to kind of advise you on anything. It's just saying what I would do, you know. But so for now, let's say I don't like this. I'm just gonna wait until we get a clearance through one of the sides, and even then, when we get a clearance, I normally like to wait for the daily candle to end. Either, you know, let's say if it ends above this barrier, great, and we're going to go higher. If it breaks and ends below this upside line, then yes, great. It kind of leads more towards the downside. So this way I approach the market. I don't try to rush into things, because maybe we'll get false breakouts, and I don't like those. Anyway, let's jump into the Forex world. AUDUSD pushing beautifully back inside the triangle pattern, and I talked about this. Look, I said that for right now, given that we're in this risk-on environment, we could see AUD and NZD pushing higher. Let's see what's happening with NZD here. Well, this one's also ignoring the fact that the interest rate is on the lower side, maybe because it was expected, so don't care. The market participants say don't care, because we were having this decline, so up all the way up until, you know, the event itself, the interest rate announcement. So, you know, the market was kind of already taking, you know, kind of pricing that in. Now I think that the fact that the risk-on environment showed up and DXY is on the weaker side, that we're seeing AUD USD and NZD USD pushing nicely to the upside. Let's see if it can be sustained. For example, for NZD, I'm watching this little barrier. I talked about this before. I need a clearance of this zone, which is roughly between the 0.5683 and 90.91. If we can get a clearance through this, then yes, great, more buyers could join in. For the downside, a drop below the 0.5580 zone here is required. This way it would confirm a forthcoming lower low. With AUD USD, look, it's a mess. I don't like it anymore. I will get rid of some of the lines here, but it's a little bit messy. So if I'm gonna watch some upside, I need to see a break of this downside line, the steeper downside, this short-term steeper downside resistance line taken from the high of the 17th of September. If we can get that clearance, wonderful. I'll go to the upside. AUDJPY. At the moment, yes, it's kind of trying. My problem is that it's not falling off the cliff, and okay, it shouldn't be, you know, but because we are kind of in a risk-on environment. So this is our risk-on, risk-off monitor. So, but the thing is that although the stock market seems to be kind of elevated in a way, you know, we're not really seeing major moves here. And to me, this it kind of gives me this feeling that the market participants are actually a little bit more on the cautious side rather than very very bullish. Yes, great, they're enjoying the fact that the stock market is not falling off the cliff, that we're still, you know, in somewhat of a risk-on environment. But the fact that there are a lot of concerns, honestly, like all these big tech valuations, this is a big problem. We can see Michael Burry, you know, like coming back into the spotlight. Actually, I'm happy that he's coming back, to be honest. I mean, you like him or not, doesn't matter, but he's you know, he did good. He did good, and I think that he has some logic in it. Of course, it's all debatable, you know, but about certain things, maybe he does have a good idea. Yeah, so look, going further, NZDJPY, this one's beautiful. Oh, by the way, I'm loving this one. Look at this beautiful thing here. We are in a nice little kind of box here. Sorry, we're in a nice little box here, and we're in a nice little range here. So basically, we need to see a clearance of one of the sides here before we could go further. We're closer to the upper side of this range. Sorry, I had to tone it down a little bit. I think I was got way too enthusiastic with my webinar, that I think I a little bit started way too much shouting. But anyway, look, we're in this little nice beautiful box, and we're watching this little exit here. I hope we're gonna get an exit if we can get a nice push higher. But again, let's not forget NZDJPY. It's another risk on, risk off monitor. Maybe we'll get, if the stock market reverses back down, then that's it. Where we could see a reversal back. Maybe the Japanese yen buying will resume. But at this point, everything is kind of pointing towards the upside, so that's why there is a chance of seeing a breakthrough here. So keep your eyes on this. We're at a very interesting spot on NZDJPY, but do not rush. Another thing to keep in mind is that, let's say, because it's such a prolonged range here, it's such a kind of, it has been quite a lengthy one since June, the beginning of June. I would say keep your eyes on the weekly chart, because on the daily we might get, let's say, a push higher here. We could stay outside of the box here, but let's say, for today it could stay above it, or maybe tomorrow. But then let's say on Friday, if it actually drifts back down, then the interesting bit is that on a weekly we would have ourselves a nice little false breakout. So keep that in mind, because if the weekly candle ends up staying, the body of the weekly candles ends up staying above this, then okay, great, I'll go higher. But yeah, let's not rush. Okay, the daily is good. I like daily, and it's already a big time frame, but sometimes for better confirmation I like to look at the weekly. EURUSD, this one, look, I'm not gonna do anything with it until I see a clearance through one of these sides. At the moment we're just kind of moving sideways, so if you are a range trader, congratulations. This is something that you probably like, and this is something that you probably want to see. But I don't like the ranges that much. I like the breakouts out of those. That's the only thing that I like about ranges. Look, keep your eyes on this. Like I said, it's an interesting one, the EURUSD. It has potential here to the upside and to the downside. I know that doesn't help, but hey, we're currently oscillating around some of these EMAs, so I'm not really, like I said, I'm not a huge fan of this one. EUROJPY, EUROCHF, okay, this one's pushing higher, a little bit of a retrace, could be seeing a little bit of a retracement back down. But look, I think that the easy approach here, given that we already had quite a steep up move here, I think that keep your eyes on the 200-day EMA. If that gets cleared, we can go higher. EUROJPY. Okay, this one, I don't want to say that I'm very bullish, to be honest, on this one, but I need a clearance of the current highest point of November. Or should I say the current highest point of this year, near the 182 zone. If we can get a nice clearance of the 182, I'll go higher. But at the moment, don't get me wrong, we had a great run this year. So far, the Japanese yen depreciated against the euro. Where's that? January, there we go. It's around like 11, 12, almost. At one point we were like 11.8%. That we have depreciated against the Japanese yen, that has depreciated against the euro. So yeah, it's an interesting one. Yes, we can see the stock market, is a big factor. Everything is risk on this year, big rallies, but the Japanese yen, I think that its time will come. It will shine, especially if we will see, going into December, if we'll see some interest rate hikes. GBP, ladies and gentlemen, let's jump into GBP. There we go. Now, we broke the downside line. So from the technical side, it looks a little bit more bullish than bearish. However, we're struggling with this 1.3191. Normally, I would say I'm bullish, and especially if we also climb above this little hurdle. But again, given that the day is quite extraordinary, given that we are seeing, we're not seeing yet, but we will see the UK budget. Now that's where the interesting bit comes in, and basically we could see, like I said, we could see some action here. Now, I don't want to say, I don't really want to speculate too much in terms of direction, because I think that we could see up and down movement. And I normally try to avoid kind of going into this way too much speculation in terms of direction where it could go, but certainly I don't have a crystal ball, right? I mean, nobody has. And for now, I'm going to keep an eye on the 1.3191. If we can get a nice clearance of that one, then great. I'll go to the upside. For now, the downside scenario is, for me, is if we do fall back below this downside line, and then I will consider a move lower. Going into USDCAD, ladies and gentlemen, USDCAD. Okay, I'm really curious what's going to happen here. Previously, I talked about this little area here between around the a little bit below the psychological 140 zone. So around the 1.3976, 86 around here. It was a good area of support from which we rebounded, pushed higher. I think now it's time to get rid of it and kind of focus on this barrier right here. This is the 1.4140. That's the highest point of November. And also at the same time, we could be forming something of an upside, an ascending triangle pattern, which according to all the TA rules tends to break to the upside. So for now, long story short, again, let's see if this is going to end up being something like that. But while we remain inside this potential pattern, I will not touch it. I will just remain very careful. Again, I don't like to trade these, and just I rather leave it and wait for a better opportunity. USDJPY, beautiful rebound, amazing. This is what I talked about on Monday as well when I was covering this one, and beautiful rebound from this upside line. Let's see if we can travel higher. If it breaks this upside line, then certainly there is a chance of a drift lower, especially if we also drop below the current lowest point of today. USDCHF, I like this one. I like this pair. It remains above this broken downside line, which we, in a way, could remove already. And actually, we can do that. But I'm still curious if we were going to get a larger correction back down here, maybe towards the 50-day EMA, where we could also test this broken downside line, and maybe we'll just do something like this. Let's see if that's going to be the case. Ladies and gentlemen, gold, look, I talked about it and it worked out nicely, because what I was saying that if we do get a rebound, we're currently in a triangle, right? We're between the trend lines, and we're forming something of a symmetrical triangle. Now, while we remain inside the triangle, it could move up and down, but if it starts clearing one of the sides of that triangle, now that's where it becomes a little bit more interesting. So we wait for the breakout in a way. So if you've missed the rebound from here, and by the way, I talked about it on Monday. I sent this one out to to our VIP clients, and gold was still here. I said, like, look, keep your eyes on, maybe we will see a little bit of a rebound here, and worked out nicely. For now, I'm not really doing much. Yes, there is a chance of a breakout higher. If it breaks out higher, if it breaks through this upper side of the triangle, in a way, it would confirm just your technical analysis rules in a way, because if you have like a triangle here, you look at the prevailing trend. The prevailing trend is to the upside, so the greater chance for this one is to break out higher. Now, let's see if that's going to work. And for now, yes, like I said, keep your eyes on this one, and we could see maybe some higher areas. Silver, similar story. This one's pushing back up. Now, this one is forming something of an ascending triangle, and I think that this highlighted territory has to go here I think this would be a little bit better here. So for now, we're pushing above the 52 territory, and if we're going to stay above the 52 territory, I'm going to lean a little bit more towards the upside platinum, pushing back up, although we are in a descending triangle pattern, which according to all the TA rules tends to break to the downside. But again, we're waiting for a confirmation break because I've seen this happening in the opposite direction many times. So I don't want to rush into things. Okay, I mean I do like this this one to the downside, but if everybody else is going higher, then they will drag they will drag this one after it. Simple as that. Palladium, Palladium also another one that I really like, and also it seems like maybe it's forming something of a descending triangle pattern as well here, but as always, a confirmation break is needed. If we don't get that, then yeah, then there's nothing to actually add here. We could just kind of move inside this pattern, but yeah, if we get through one of the sides of this triangle, and by the way, I need to adjust this very quickly. I think this is going to be enough. I think this is this is kind of what we need to kind of focus on right now, not too much on the chart, but I think this is quite clear. And while we remain here in between the two lines, I will say that I am not really doing anything. I'm just observing the price action. Now, copper. Okay, copper. It's a metal everybody needs. A good conductor, and although silver is better, but a good conductor and everything. But from the technical picture, the price structure here looks that we're in a range, or we're stuck in a sideways activity here. So very straightforward in that case. If you are a range trader, congratulations, this is for you. If you're not, then you wait for kind of a clearance. So yeah, we're in this little box here. So we need to get we need to think outside of the box, right? Anyway, ladies and gentlemen, sugar, my beloved sugar, I like it. And very technical. I like this price structure, and it looks positive. If you've missed this move to the upside, which I talked about, I said that if we do clear this 14.74, I'm leaning a little bit more towards the upside. We did get a move, but then we kind of dropped a little bit back below it. So what's happening right now? I think this is what's happening right now. I think that if you're looking for some higher levels, another good option here is to consider a push above the 15.05. Like I said, we had a great run. As long as we stay above this upside line, I think that there is a good chance of drifting higher. Once we start clearing the upside line, then that's where we could see some lower areas. Jumping into Brent oil. Now this one's interesting because look, yesterday I talked about it. Oh, the sun is gone. I talked about this one yesterday, and I said to you that we were sorry, not yesterday. Yesterday I wrote about this. Sorry, I talked about this on Monday, but yesterday I did a little update on this one. But what I said that look, we're testing, we're trading, we're flirting with this upside support line taken from the low of the 9th of April. Now I do understand this upside line is a little bit on the tentative side. Again, it depends on how you draw it. You draw it this way, and if we do draw it this way, then you'll see that we tested it perfectly yesterday. We rebounded, so I still need a break, a good break of that upside line. If I can get that break, then I'll consider further declines. In general, I am bearish. I'm bearish on oil because there's like a we have lack of demand, in this one, and but certainly, it's a little bit of a coin toss now, especially going, with this conflict, the peace of between Russia and Ukraine. If that's going to happen, if the ceasefire is going to happen, and or actually the other way around, if the end of the war will happen and the terms will be met, I think that we could see oil drifting further south. Why? Because we will have more, we will have more of it in the economy, in the market, and, because the sanctions will be lifted. So that means that, everybody will be able to export. So yes, we could see this one drifting actually further south. Again, that's my view, but maybe you have a different view. But I'm more than happy to listen to other opinions, because again, this is an important matter, and that's why, like I said, I'm approaching this one just from my own common sense side. So if you remove sanctions on Russia, and Russia is one of the biggest oil exporters, and suddenly you have more oil in the market, so supply demand, right? Again, maybe I'm missing something, but certainly we'll see how it goes. For now, from the technical perspective, there is a chance for an upside, because maybe, just maybe, what we're seeing here is a possible kind of bullish structure, right? Especially maybe can be visible on a monthly, on a weekly chart. So you see, we have a strong candle to the upside here in October, and then we have a gradual few candles to the downside. But their bodies are still somewhat within the body of that big weekly candle. Now there is a chance, like I said, to see this. It's not a bullish three no longer. No, it's more of a just a kind of like a flag-ish correction. Maybe this could be seen as a flag, but although it's a very prolonged and not a very nice one, so but either way, look, if we do clear this little short-term downside line taken from the high of the 24th of October, I'm going to lean a little bit more towards the downside. Why? Because at the same time the price would climb above the 50-day EMA shown as the green line here. And natural gas. This one's interesting. It's struggling with this 4.6869 zone. If we get a clearance of that one, we'll go higher. If we don't get a clearance of that one, there is still hope for the bulls, because we have this upside line here. But if we do break this upside line, and by the way, this upside line is a very tentative one, so might not be the top trend line to draw here, but I had to find something. If we do break this one, maybe then we can go a little bit lower. But you know what, it has the same kind of it has the same I wouldn't say value, but credibility as this upside line, almost, which again, actually this one has more touches, has 3 touches. So if we do clear this upside line, I'm going to lean a little bit more towards the downside. Bitcoin, ladies and gentlemen, Bitcoin looking good here, looking good. What can I say for now? It's an interesting one here. It's the 83,000 that I'm watching here. We had a rebound from this 83,000 zone. That's great. We had a push higher, 88.5 zone-ish, provided good resistance. We're still holding below it. So if you're looking for some upside in the short run, I would say wait for a push above the 88.76 or 800 zone, if we can get a nice clearance of that one, or even the 89 zone in general, if you're 89,000, I mean. And then yes, potentially more buyers could join in, and we could see a larger correction to the upside, because don't forget that we're still below some downside lines here. Bitcoin Cash. Now Bitcoin Cash, I do love this one, and it's really, honestly, it's a very interesting one. After breaking the downside line, it then retraced back down, and kind of so far it's doing my my theory here, where I said that whenever we break a trend line, we tend to revisit it from the other side. So so far it's doing exactly that. Let's see if it can stay above this downside line. If it can, great, I'm going to consider a move higher. But if it starts falling back below this downside line, then yep, there is a chance of a larger kind of move lower, maybe only up until this upside line here, taken from the low, the 17th of October. Very quickly on Ripple, a little bit of an in correction mode, but it does have a chance here. So in general, this worked out. I talked about it. I said that, look, if this 1.1990 zone holds, provides good support, then yes, certainly there is a potential here for a rebound, and we got that one. So now at this point, I'm not really going to do anything, to be honest. While we remain below this downside line, but above this 1.1990 here, this downside line, by the way, is taken from the high of the 5th of October. If we do stay somewhere in here, I'm not really touching it. Once I start seeing a clearance of one of the sides here, then yeah, I'll get a little bit more excited. Ethereum after a good rebound from this 2,636 territory. I spoke about this level. I like this one. I said this is going to be one of my targets. Surprise, surprise, there we go. We got that move. So what's next? For the downside, I need to see a drop below the 2,636. That's the near the lowest point of November, and by the way, that's the high of the 3rd of July of this year. It's an inside swing high here. If we stay above it, great, I'll go higher. But if we do fall below the 2,636, then yes, great, more sellers could join in. Litecoin. Litecoin is an interesting one here, and Litecoin is look, if we do get a larger correction back up, I'm still keeping an eye on that 90.30 zone. I think it's a good area of resistance and support in the past. So why not to keep in mind, and why not to just consider it? So if it provides good resistance, then I'm considering a nice move back down. For the upside, now I have put this level here, but to be honest, I really don't like any of the levels here for now. It's whenever I get into this point, I think what I need to do is just focus on something else. And for me, something else would be my EMAs on my daily chart. If we climb back above all my EMAs on my daily chart, wherever they're going to be, I'm going to lean a little bit more towards the upside. And Dogecoin, very quickly, nice rebound back up here. Look, if we stay above the 0.1430 zone right here, I'm going to consider a larger correction back up towards this downside line. Polkadot is holding, still holding, yes. Doesn't want to go lower, it seems, although it looks a little bit more bearish than bullish. So as long as we stay below the 2.35 zone, I think there's a chance of a further decline. But if we do climb and stay above the 2.35 zone, I'm leaning a little bit more towards the upside. And finally, Tron, one of my favorite ones. This one looks bearish as well, and look, we fell below the 0.2764 territory. I really don't kind of mind seeing this one going to the downside, and I think there is a good chance as long as we stay below this hurdle. But if we somehow climb back above it, I'm going to consider a bit of a larger correction back up, maybe a little bit right here. So we'll see what's going to happen. Certainly for now, it's everything is tentative, don't get me wrong. But if we do break actually this downside line, this tentative downside resistance line, then yes, I'm going to get a little bit more excited with the upside, because at the same time we would climb above my 20-day SMA within my Bollinger Bands here on the daily chart. And ladies and gentlemen, that is a wrap. Thank you very much. Thank you very much for watching and listening. I really appreciate your time, your views, your likes, your comments, please. Thank you for that. Hans Nortje, thank you very much for your participation. I can see that there are some more people participating, so everybody, thank you very much as well. Look, I hope you found it useful. I don't know. Again, like I gather here every Monday, Wednesday, and Friday just to kind of express my opinion on the market. Again, sometimes it's a little bit controversial, but hey, that's, we all are entitled to our own opinion, right? I mean, so you might agree, you might not agree, but as always, like, leave me a comment if you don't agree, or if you do agree, actually. But I hope to see you in my show today. So yeah, check out the link in the description below. Or if you cannot make it, then certainly I'm looking forward to seeing you on Friday for my another Markets Talk webinar. So yes, thank you very much, Hans Nortje. You're welcome. Like I said, I hope you found it useful. Everybody, you can always reach out to me on LinkedIn. Don't get me wrong. I mean, I'm not really like hiding there or something, but you can always reach out. The only thing is that if you want to, connect, then please do write me a message first. Before, like, to let me know, why are we connecting? Like, I mean, have you seen one of my shows or something like that, and then yeah, we can go from there. So, ladies and gentlemen, thank you very much, and I'll see you later. Bye bye.